We covered the condor for range days, and the butterfly for precision closes. But what do you trade when the market wants to move? When SPX is coiling inside the opening range like a spring ready to snap? You trade the ORB, the Opening Range Breakout, but not the way most traders do it. Forget the 5-minute breakout. Forget the 15-minute opening range. Those are noise. I use the 60-minute initial balance, and SPXXL tells me when to pull the trigger. This is a 100-year-old pattern, formalized by Toby Crable in 1990, upgraded with 7 dimensions of confirmation. Let me show you exactly how it works. Most ORB tutorials tell you to trade the 5-minute breakout. That's a recipe for getting chopped up. The first 5 to 15 minutes are noise. Gap fills, market maker positioning, retail panic. The 60-minute initial balance is different. It captures the full first hour of institutional positioning. The auction settles. The range is established. And when that range breaks with conviction, the move is real. But here's the critical filter. Not every day is an ORB day. Trend days and expansion days, those are your green light. The IB breaks and price runs. Balance days? Volatility compression? The IB breaks and comes right back. That's a fake out, skip it. And this is where SPXXL changes everything. Before the bell even rings, the engine tells you what kind of day it is. Trend day at 78% confidence? Momentum score above 65? That's your ORB day. You're not guessing. You know, before the range even forms, whether today is worth trading. Before I enter any ORB trade, I run through 6 checkpoints. All 6 must be green. If any one is red, I don't trade. This is what separates SPXXL from every other ORB strategy. Checkpoint 1, Session Classification. Trend day or expansion day at 70% confidence or higher. If the engine says balance day, no ORB, period. Checkpoint 2, Momentum score above 65. Checkpoint 3, IB width versus average daily range. Narrow IB, less than 40% of ADR. That's a coiled spring. Wide IB, more than 80% of ADR? The range is already consumed, skip. Checkpoint 4, GEX walls. Is there a massive gamma wall at the IB boundary? If a huge put wall sits right at the IB low, your bearish breakout will stall. Let GEX confirm, not contradict. Checkpoint 5, VWAP position. Bullish break? Price should be above VWAP. Bearish break? Below VWAP. If VWAP contradicts the break, fake out warning. Checkpoint 6, close zone projection. If the close zone projects a close above the IB high, that's your final confirmation. Now let's talk structure. Just like with condors and butterflies, we use debit spreads. If high breakout, call debit spread. If low breakout, put debit spread. Max loss is the debit paid, typically $200 to $400. Defined risk, no surprises. Why debit spreads over naked calls? 3 reasons. Defined risk, your max loss is the debit, period. Theta neutral at entry, the short leg offsets the decay on your long leg. And survivable false breakouts, lose $2 to $3 per contract instead of watching a $15 option go to zero. Here's the entry trigger. A 5-minute candle must close beyond the IV boundary. Not just wick through it, close through it. Volume on that candle, 1.5 times the session average. That's institutional participation. Enter on the close of that confirmation candle. Never anticipate the break. If SPX is at 5,540 and the IB high is 5,535, by the 55.30 call, sell the 55.40 call. $3 debit, $7 max profit, 2.3 to 1 reward to risk. Exit framework. Scale 50% of your position at 50% of max profit. Another 25% at 75% of max profit. Trail the final 25% to the next GEX wall or the close zone boundary. Hard stop. If price closes back below the IB boundary on a 5-minute candle, you're out. Immediately. No hero trades. The number one fear with any breakout strategy: false breakouts. Here's how you eliminate 60% of them before you enter. 3 filters. Filter 1. IB width less than 0.6 times ADR. The range is coiled, there's room to expand. If the IB is already wide, no room left. Filter 2. Volume on the breakout bar. 1.5 times the session average, minimum. That's institutional money moving. Low volume breakouts are traps. Filter 3. VWAP alignment. Bullish break above VWAP, confirmed. Bullish break below VWAP, contradiction, skip. All 3 filters must pass. Session type says trend day. IB is narrow and coiled. Breakout bar has real volume. VWAP confirms the direction. Now and only now, you enter. That's discipline. That's edge. Here's your ORB morning routine. 7 a.m., check the pre-market brief. Is today classified as a trend day? 9:30 a.m., market opens, watch the IB form. 10 a.m., IB is set, measure the width. 10 to 10:30, run your 6 checkpoints. All green? Wait for the breakout candle. Candle closes beyond IB with volume? Enter the debit spread, set your stops, manage. The ORB isn't just a breakout trade, it's a system. Session classification, check. 6-point confirmation, check. Defined risk debit spreads, check. 3-filter false breakout defense, check. Scaled exit framework, check. Condors for range days. Butterflies for precision closes. And the ORB for when the market wants to run. 3 structures, every session type covered. SPXXL tells you if today is an ORB day, before the bell even rings. 5 free days, full elite access, no credit card required. Link is in the description. And if you haven't seen the Condor and Butterfly videos, they're right here. Watch them next.